Welcome to Streams of Income, hosted by best-selling author and entrepreneur Dr. David Powers, where we discuss streams of income, passive income, residual income, and even why there are dinosaurs and zombies in this intro. Fasten your seatbelts and get ready to dive in.
Hello, everybody. Welcome to the Streams of Income podcast. I am joined with a very special guest today I've been looking forward to because I've got a pile of his books right here and some really good reading information. And I've been really just, like I said, looking forward to this. And so, Oliver, if you could just go ahead and tell us a little bit about yourself. And I know you've got so much stuff to discuss. Plus, I got tons of questions. But tell us a little bit about you first and maybe how you got started into all this investing and the stocks and everything else. What brought you into this?
Dave, appreciate the intro. So my background is I have no formal investing background of any kind. I've never worked for a hedge fund. I am 35 years old in a couple of months' time. I live in London, and my entire background in this was essentially my grandfather lost all of his money in 2008. So he was very poorly advised. He had his entire net worth in about 4 bank stocks going into the great financial crisis because his advisor told him, well, banks are always going to be safe. And we learned that that was not the case. And that sparked in me a now 17-year journey of, well, this man who is so intelligent and so successful in so many areas of his life, how did he get it so wrong? And so my journey has just been investing my own money for myself. I've never managed anyone else's money, and learned the hard way, made the mistakes, and now I try and help people not do the stuff that I did and do the stuff that my granddad did.
Yeah, man, when I read your grandfather's story in the book, that amazing story. I mean, I hate that it happened, but the results of that, I mean, what an amazing outcome in your life.
Really, I always say, I can't remember where I first heard it, like every man's life has value, even if it is just to be a bad example. And he had so much value in so many other areas, but he was the bad example. And so much of my knowledge and my thesis on this whole individual investing thing is based off of what not to do. And it's a really interesting viewpoint to come from because so much investing information comes from the top down. It's
Yeah.
institutional money managers telling individuals how to manage their money. And it's two sides of a very, very different coin. And so we have to understand, as individuals, we are playing a different game.
Yeah.
And that's why I always work off as our base.
Okay. And you talk about helping people. I mean, one of the books that I got that you read was Investing for Kids. And I love that because I homeschool. I've got 5 kids that I homeschool. And we've always made personal finance a big part of the math curriculum. Money math, we call it. And I mean, you learn money math. You don't even need the others. Not that you don't need to learn those, but you know what I'm saying. Money math is going to get you a lot further than algebra and trigonometry and all the others that it's like the old saying goes, are we ever going to use this stuff again? And the money math, I promise you will.
100%. And I don't have 5. I only have the 1 right now. She's enough. Believe me. She got her first tooth yesterday, and that I'm okay with that right now. But you're right in the traditional public school system. I went through the UK public school system. I went to university. There's nothing on compound interest. There's nothing on the power of the stock market for wealth generation. There's nothing on interest rates and how they affect you as a person.
Mhm.
You may learn the concept of percentages and interest, but it's not, hey, that credit card's at 29%. If you only pay the minimum balance, here's how much your debt's going to add up. And so that's why we did the book for kids, because we learn all of our financial knowledge from our parents. Some people have great financial backing, not just monetarily, but just mindset. Others just learn awful habits. You know, if your parents are perennially in credit card debt and always telling you about how there's no money, guess
Yeah,
what? Guess what you're going to internalize?
exactly. Yeah.
And I was lucky, you know, my dad imparted to me, look, whatever you earn, spend less than that. And that's like the ultimate foundation for all of it. But he didn't tell me about, you know, compounding investments. He didn't tell me the difference between putting something in a bank account that might pay 0.5% interest versus buying an index fund that will pay you 9% on average.
Yeah.
And that's what we wanted to do in that book is really just teach kids the absolute basics of, okay, this is how you manage money because money's not everything, but it is one of the few things in life you cannot avoid. You can't opt out of the money game.
Yeah. Yep. And then, they say money doesn't buy happiness, but it sure does get rid of a lot of problems that rob you of happiness.
Absolutely. Absolutely. And
Yeah.
it's
Could you
really that case.
imagine? I mean, kids, I'm thinking about my teenagers. I mean, a pair of jeans is $100. A pair of shoes is more than $100. Unless you're buying, thrift store stuff. Could you imagine if kids went into, let's say, their final year of high school and they had a class where you started with $100, taught them some investing strategies, and they put that in the market? I mean, how much that would set them up for success compared to what they do?
I would love that for everyone. And just to see the ebbs and flows of things like stocks. You know, there's always this back and forth between like stocks versus real estate. And the real truth is both.
Yeah.
But the one thing about real estate where there's an advantage over stocks is nobody panic sells their house. Because you don't have a guy knocking at your door every single morning going, Dave, I think it's worth 50 grand less than it was yesterday.
Yeah.
But with stocks and especially now, you know, investing's very different than when I started. It's very, very different from the 90s, the 80s, the 70s, which a lot of, you know, my clients and my students grew up in. Now I can sell my entire portfolio in 3 minutes from my
Yep.
cell phone. I can load up X or Twitter, whatever you want to call it, and have 50 different opinions about stock I own. And just being able to walk someone through that and say, you know what, ultimately, very, very few things matter here. Whether your stock's $99 or 101 today, and whether it's 99 or 101 tomorrow, the company isn't thinking about that.
Yeah.
They're not sitting in the boardroom going, oh, stock's 99.70 today, guys, let's cancel all the plans.
Yeah.
And you've got to think like a business owner if you're going to be an investor. And being a business owner has made me a better investor, and being an investor has made me a better business owner. And you're right, like being able to teach that to kids and being able to impart that on them, no matter if you want to be an entrepreneur, whether you want to be an employee, whatever you want to do, those skills are invaluable.
Yeah. Oh, yeah. Yeah. I mean, and the weird thing is, a lot of people that, because I do a lot of investing, I do a lot of entrepreneurial stuff, and the W-2 employees, or here in the US, W-2 is just a regular employee. They're the ones that are telling me, wow, that's risky, or wow, I could never do that. Stocks are risky, and yet they'll go buy a car that is worth 20% less the second you drive it off the lot. And then they'll tell me a stock drops $1 that I'm risking everything.
The big thing for me, and this became really apparent in 2020, was people, you're right, people say stocks are risky. I say, okay, do you have a 401k? Yes, yes, of course I have a 401k. Well, what's your 401k then, if that's not invested in stocks? And so many people, for the first time in 2020, especially if they're my age, for the first time ever, they saw their 401k balance go down.
Yeah.
And it's like, yes, that can happen. But over a prolonged time period, on average, it will go up.
Yeah,
And
absolutely.
trying to get people to understand timelines is one of the hardest parts of this line of work. Because I'm not Nostradamus. I don't know what the market is going to do tomorrow. And frankly, I don't really care.
Yeah.
But I do have conviction that certain companies will be in a better position in 5 or 10 years than they are today.
Oh, absolutely. I mean, Apple's going to come out with a new product or a new version of the current product, and people are going to go crazy in line to buy it. And yeah, it's going to happen. I tell you what, I keep reading so much in your books about the wheel strategy. So I don't want you to give away the secrets because I'll be honest with you, I get your emails, and so you give away so much information. Can you tell us enough about the wheel strategy to for the listeners to kind of whet their appetite so that they'll go and sign up for your email list, buy some of your books, just make us crave more information about it.
I love the wheel strategy, and it is the only thing I do apart from long-term buy and hold investing. So if we distill down all aspects of investing, it's one of two benefits. Either you get long-term capital appreciation or you get income. So income, usually that's something like dividends, but the wheel strategy, I always call it like dividend investing on steroids because the wheel strategy involves selling options contracts. Now, options itself is a dirty word. When you say options, most people think of gambling, and to be frank, that is what most people use options for. But very, very smart people like Warren Buffett, for example, instead of buying options contracts, they will sell them, which is a lot like selling insurance because someone wants to buy a contract because they think something's going to happen in the market. I will sell that contract to them, and because I'm the seller, I get paid up front. And this is so powerful because if you think about it, if you buy a dividend stock, you get paid the dividend 4 times a year. But with options, I can sell an options contract every single month. I can sell one every single week if I want to. And so the frequency of the payouts is a lot more than just with a dividend, for example. And the biggest risk in the wheel strategy and selling options is, well, what if you do it on the wrong stocks?
Hmm.
And so my thought is always, well, what if I just do it on stocks that I want to own anyway? One of the largest companies in my portfolio is CrowdStrike, for example, cybersecurity company, best in class. I would always want to own more CrowdStrike stock.
Yeah.
So instead of just buying the stock today, I can sell an options contract at a price lower than it's currently trading at. And if the stock keeps going up, then I get to keep the premium from the contract I sold. If it goes down, then I'll just buy more of the stock that I wanted to buy anyway. And I still get to keep the premium. So for me,
Yeah.
it's win-win. And that's the strategy in a nutshell.
Okay. Man, yeah, that sounds good. I'm telling everybody, speaking to the listeners right now, and whoever's going to watch this on video, um, get one of his books, start following his email list, because I'm serious about that. He tells you so much in the books. It's not like, well, one of my favorite books is Rich Dad Poor Dad, which is great for overall mindset, but there's no, just
There's no
actual
meat.
information in the book. And you're not short on information. You actually tell people exactly what they can do, and I just love that. Not to mention the emails are chock full of stories, and because I've learned so much about you through the emails, about your grandfather, about your child. I mean, it's nice to get to know actual real people instead of, because my dad, for instance, he is in his late 70s and he's got a stock advisor. It's well, I guess I can name names here since it's my podcast, but Edward Jones. They manage his retirement, and I feel like I've gotten to know you better than he has his retirement person after decades. And it's
Yeah.
just like they try to keep them at arm's length, and they just keep making that commission, and it doesn't seem to be working for him.
Do you mind me speaking on Edward Jones specifically for like a minute
Oh,
or two?
go ahead, man. It won't bother me a bit.
And this isn't purely an Edward Jones problem. This is every large financial advisor. So
Yeah.
if your portfolio is being managed through Fidelity or Schwab, for example, it's the same deal. But your advisor has incentives. Those incentives may not necessarily align with your incentives. Their incentives are for you to give them as much money as possible to manage. because every single year they're going to take their 1%, regardless of performance, but they may be offering you suboptimal performance based on who you are and what your goals are. We've had people come to us who are 40, 50 years old, and their portfolio is the kind of portfolio that an 80-year-old should have.
Yeah.
There's no growth, there's no upside at all, and it's all just in very, very low volatility bond funds that have, once again, a 1% a year management fee on top of the 1% that Edward Jones is already charging you. And if
Yeah.
you go to Edward Jones, you say, okay, so what are you making off of this? And they just say to you, we make 1%. It's like, yes, that is objectively correct. But what about all the money that I'm spending on fees investing through you? What about the kickbacks that you're getting from these funds? And Edward Jones actually got fined, I believe it was about $250 million in the
Oh,
early 2000s because of this, because they
yeah.
weren't properly disclosing the kickbacks they were getting from these companies like BlackRock, American funds. Now they have a very, very small disclaimer on their website, which you have to really dig to find. But because they say they publish it now, and I looked up their 2023 numbers, and it was 300 million a year they received from these companies through
Yeah.
recommending certain funds. It's like they're not going to tell you to buy VOO, which has a 0.03% management fee. They'll tell you to buy American Funds Growth Fund A, which does the same thing for 30 times the fee. And this is the problem with these big name advisors. Don't get me wrong, there are a lot of genuinely good financial advisors and financial planners, but they do tend to either own their own firm or work for a small firm where maybe they're only handling 10 or 20 clients, not 250.
Yeah. Yeah. Man, yeah, it's just interesting to me. I mean, there most of them just seem so faceless and everything. And so with you, I mean, obviously I keep mentioning the books because they were such a help to me. But what else do you do? I mean, do you do training, advising, coaching, anything like that as well? Or
So our goal has always been to empower people to manage their own stuff. So we don't
okay,
manage anyone's money. We don't do any advising for commission. We have coaching programs where we will work with people in a small group setting with some one-on-one elements to it as well to help people manage their own money. And sometimes people will come to us and be like, okay, these are my goals. Here's how much I have. And I'll turn around, I'll say, just put it all in a money market fund. You've got more than enough money to live off for the rest of your life. You don't
yeah,
need us. Other times, it may be a question of, well, have you considered doing this with your money? Have you considered putting some of it in something like the wheel strategy, for example? Or we'll have the opposite problem. We'll have people with their all of their income sorted, but there's no room for growth.
hmm,
And it's like, do you want to give this to your kids one day? Do you want to give it to your grandkids? Yeah, absolutely. Well, there's no growth here. This is all in bond funds. Why don't we just
yeah,
take 10% of this and let's look for some opportunities that can compound over the long term? And the coolest thing that comes from all of this is not just the financial returns for people, it's the fact that they, for the first time in their life, are truly understanding their finances and truly taking an interest in an area that has been a massive part of their life. But for so many people, they just sort of put it off to the side. I can't do that.
yeah, yep,
I've always just said, look, that's a limiting belief. If these are some of the most qualified people on earth, PhDs, aerospace engineers, and you're telling me that you can't work out a price earnings ratio. You don't even have to work it out. You just go on a website and it tells you. And you're telling me you can't do that. You build rockets for a living. Come on.
yeah. You can run physics to get us to Mars and back, but you can't.
Ex- Exactly. And it's people from all walks of life as well.
Yeah,
It's a really beautiful thing because some people come to us like, I'm only a school teacher. I'm like, what do you mean you're only a school teacher? So you can digest large amounts of information and make it accessible to people who have less experience than you. Well, that's exactly what we do all day, every day. So of
yeah,
course you can do it. or the military people. Like, oh, I was in the military. I don't really have much real world experience. I was like, so you know how to function under very highly stressful environments. You're going to be just fine.
Yeah.
And also you're good
Yep.
at following rules. So that's even better.
So we mentioned Edward Jones and all them, and very seldom do I run across somebody that is in that vein of things that likes crypto. I mean, they avoid it like the plague. And so, what are your thoughts on crypto?
I think with crypto, we have to draw a line in the middle between Bitcoin and then everything else.
Okay.
So Bitcoin, the first ever crypto book we wrote was just about Bitcoin. And this was in the beginning of 2021. So the last bull run we had, this was the beginning stages of that. And in that book, I outlined the only thing I wanted to do is outline Bitcoin as a legitimate financial asset. So we outlined it. Okay, so what constitutes a currency? It's got to have various aspects, like it has to be considered a store of value, it has to be divisible, has to be fungible, has to be widely accepted. Bitcoin ticks all of those boxes.
Mhm.
Cash ticks four of the five. Gold ticks four of the five. Bitcoin ticks all five because it's deflationary. And so, just like, before this, I said everyone should own some sort of alternate asset
Mhm.
just as a hedge more than anything else. Like gold was always the go to example for this. And I owned gold in my portfolio for a very long time. Just a small percentage as a hedge or as something uncorrelated to the rest of the market.
Yeah.
Now I think Bitcoin fulfills that role because you have something that is not beholden to any one country or person, something that is truly deflationary as there is a fixed supply, and something that has value because, the SEC now has stated this is a legitimate financial asset. We cannot unroll those doors anymore.
Yeah.
We can't. Pandora's box has been opened. Public companies are putting it on their balance sheets. MicroStrategy, for example, has become one of the largest companies on earth just through holding Bitcoin.
Yeah. Wow.
And now, so I say to everyone, look, I don't care if you're 18 or 88, having some exposure to Bitcoin is a massively reward skewed risk reward situation.
Hmm.
I'm not saying put your whole net worth in it, that would be very foolish.
Yeah.
But if you if you're 80 years old, having a 1% exposure to Bitcoin is not going to kill you, but there is upside there. If
Oh
you're
yeah.
18,
Absolutely.
this is going to be part of the financial future. Whether you
Yeah.
like it or not, it's worth having exposure.
So on
The
the
rest of,
other side of that
yeah,
line,
on the other side of the line, you have the rest of crypto, which is it's an it's an asset class I go back and forth on a lot.
yeah.
I own various cryptos in my own portfolio, from Ethereum all the way down to I own a handful of meme coins. And you have to understand what it is you're actually buying. If you're going into it with the mentality of there is
Yeah.
a pretty high likelihood this all goes to zero,
Yeah.
but there's also a non-zero chance of 100 or possibly even a 500 or 1,000x,
Yeah.
once again, it's worth a small portion of your assets. But crypto now has been corrupted because what was originally this sort of like anti-establishment movement has now become very much an entrenched establishment movement. We have venture capitalists backing crypto projects now. We have the exact same situation that we do in traditional finance, in that a very small percentage of people get in very early before the public. The price gets bid up. Once there's a public launch, anything now that you're trying to measure on an Excel spreadsheet, like we would a traditional financial asset, you can see that this thing is completely overvalued. So anyone who's buying it on the open market now is going to get destroyed.
Yeah.
And most of these crypto projects are overvalued by 80 or 90% by any traditional financial measure. And so you are left with this weird divergence where you have a couple of assets at the top which you can make an argument for,
Mhm.
things like Ethereum, things like Solana, for example. And then you have whatever's going on at the other end of the market with meme coins and
Yeah.
outright scams, where a couple of people will probably profit pretty handsomely. Most people are going to get absolutely destroyed.
Oh yeah. Yep. Yeah, and the way I've heard it said is don't, especially the meme coins, that other side of the line that's not Bitcoin. I've heard it described as don't invest more than if you wake up tomorrow and it's all gone, it's not going to hurt you. But if you do wake up
100%.
and it's 10x, then be happy and maybe sell fast.
I always say, like, whenever you're thinking about taking a screenshot of how rich you are, that's when you sell.
Yeah,
Because when you start thinking about bragging, that's when you tend to get humbled. And it's the thing with crypto, why it's so powerful is at its very core essence, it is the ability for the regular person on the street to get rich really fast without much work or skill.
Mm. Yeah,
And as long as that exists, it will still be around and it will still have its ebbs and flows of popularity. Just like with sports gambling, just like
yeah,
with casinos, just like people playing the lottery.
yep,
Because it's that hope and it's that yearning to break out of whatever situation you're in right now. And I think more and more people than ever in the US, in the UK, are feeling a certain level of despair with their situation and they see it as their way out.
yeah, yep. You said risk and skill, and sometimes a little common sense lacking too with the way they invest or how much they invest.
Exactly. It's always back in the day, it was penny stocks.
Yeah.
It was, I've heard a tip from this guy who works with this guy whose cousin's friend's dog said that this uranium mining company is they're gonna strike it. And look, it's only 0.3 cents right now. If it just goes to $1, we're all gonna be trillionaires. And it's like if you spend more than 5 minutes in this industry and you understand how market caps work, you know that's not gonna happen.
Yeah.
But it's that even if logically you know it's probably not going to happen, that tiny little bit of you that says, yeah, but what if it does?
Yeah.
That's what is always going to be there. That's what's always going to drive this stuff.
Yeah. Oh yeah, absolutely. Now one of the later books you sent me that I've not actually finished yet, but it's on AI. So what are your thoughts on that?
I think with AI, we have to look at it as a paradigm shift, just like we did with the internet, where the ultimate sort of end game for this is it just exists in the background. Just how, we don't call things internet companies anymore.
Mm.
It just exists.
Yeah.
You're not doing your internet business. That's just how you run your business. And the same thing is going to happen with AI. The six or seven largest companies in the world either are spending, I think it's $350 billion of capex in the next 12 months on AI, or
Wow.
they're that big because, like Nvidia, for example, is big because of all this capex.
Yeah.
These people aren't stupid. They realize there can be exponential productivity gains with AI applications and with AI as a technology. Now, going hand in hand with that, when it comes to investing, is we do get bubbles popping up. We get companies putting AI in their name and the stock price triples overnight. We get companies with very, very poor earnings shoehorning in AI so management can try and retain their jobs. And this will continue to happen for as long as investing is around. The latest one, by the way, is quantum computing now.
Yeah.
So when Google announced they'd made a quantum computing breakthrough, any stock with quantum in its name went through the roof. None of
Yeah.
these companies have any revenue. Most of them are actually complete scams, lying about having contracts with NASA and all of this garbage. But there is a similar situation in AI But just like the internet, over a long enough time period, the reality is going to come true. Like the dot-com bubble, yes, it was a bubble, but also the best companies in there were the ones that generated the most wealth over the next 20 years.
Yeah.
It's our job to try and discern which ones will be the winners, but also build the conviction to be able to hold on to them when the narrative shifts. Because if you do this for long enough, the narrative always shifts at some point.
Yeah.
It always goes against you. You know, Apple was down 50% in a day once. Amazon was down 94% from its peak at one point. So all these people say, well, all you had to do was buy Amazon in 1997. It's like, well, yes, all you had to do was that. And then
Yeah.
also hold it when it was down 94%. And everyone's going, do you still own that Amazon thing, you idiot? That internet shopping's never going to take off. I can go to Best Buy and get all my electronics.
Yeah.
Ridiculous. But you've got to be the person who's the fire's all around you, and you've got to be standing there in the burning building going, actually, I've got a flame retardant suit.
Yeah. Yep. I ran a calculator the other day. My sister, her teenage son was trying to get her to buy $100 in Bitcoin years ago. Because being a younger person, he was like, "This seems cool. I'm in on the $100." And I ran this calculator for her, and I showed her like today she'd have $33,000
Yep.
if she had just done the $100. And we talked about the $100 earlier. If the high school kids had $100 to invest, it's amazing.
That I think they do a lot better than most adults would because guess what? They would forget about the $100, and
Yeah,
in 20 years' time, they'd remember it and they'd be like, "Oh God, this is a lot of money." It's like Fidelity did a study, I think it was in 2014, of the people, just regular investors on their platform with the highest account sizes.
yeah,
And the people with the highest account sizes all had one thing in common, which was that they were dead. So they physically could not log in and sell anything. And the point holds true. Like, you only need a handful of really good investments and a lot of patience.
yeah,
And even with something like the wheel strategy, I always say to people, look, you ain't gonna be able to retire overnight, but if you've got a 20-year timeline for retirement, you can probably get it down to 12.
yeah,
And for so many people, I'm like, well, what's 8 years of your life worth? Is that worth pursuing? I think for everyone, it is if that's the way you want to
oh
go.
yeah, absolutely. Yep. Hey, I tell you what, as we get ready to start winding down, I'm a big book nerd and I see a bunch of books behind you. So, a question here, if you could pick three books off that shelf or just three books that you've read that could absolutely change someone's life, what three books would you recommend?
I'm not just going to do investing. I'm not going to cop out. So the first would be Psycho-Cybernetics by Maxwell Maltz. Incredible book on the self-image and how we perceive our state in life and how we can change that, no matter who you are, no matter what you've been through.
Yeah.
I think it's the only book I've read in all three formats: ebook, paperback, and audio. The second would be One Up on Wall Street by Peter Lynch, which in my mind is still the best investing book ever written. Because to me, this was the first book that actually spoke to me as a regular person.
Yeah.
A lot of people, when they first get into this, they look at like best investing books to buy, and The Intelligent Investor comes up as number one, mainly because Warren Buffett said it's a great book. I think it's the worst book to read when you're just starting out. I think there's a lot of great lessons in it, but it's 650 pages of dull, intense.
Yeah.
It's a college textbook essentially. But One Up on Wall Street is just a regular. Here's how you can do it as an average Joe or Jane.
Yeah.
He has this great story in the book about when he talks about how his wife kept bugging him to buy this company called Legs. They were making stockings in the 80s because she said, "Look, they're all over Walmart. They're all over Walmart. I'm telling you, this thing, no pun intended, has legs." He ignored her. He ignored her. He finally buys it like 5 years later. Still
Yeah.
makes a load of money off it. Then goes back and says, "Well, if I'd have bought it when she first mentioned it to
Oof.
me." Yeah. So that's number two. The third one, I think, in terms of entrepreneurship, Shoe Dog is the best entrepreneurship book because it's the most honest.
Shoe
Phil
Dog?
Knight, Shoe Dog by Phil Knight, the founder of
Oh,
Nike.
Phil Knight. Okay.
Because all that book is Phil Knight complaining about how hard entrepreneurship is and setback after setback after setback after setback. And that's the truth
Yeah.
because it is really, really hard, but it's so rewarding.
Oh, yeah. I mean, just
And
knowing
that
his story, I mean, you can see where it came out.
exactly. And I love that the book ends when the company goes public because all anyone thinks about is like, oh yeah, you're a billionaire, you're living the life, but the book ends at like the big moment.
Yeah.
And all it is the lead up to that. And if everyone who wants to be an entrepreneur reads that and really understands and internalizes the lessons of this is going to be a grind, this is going to affect every area of your life, relationships, family, health, everything. But if this is the path you want to walk, it will be one of the most rewarding things you ever do.
Yeah. Yep. Now, could you imagine a high school curriculum with those three books as the textbooks?
Don't I'm not averse to crying on these calls, but like it would be so powerful and so I remember the books I read in high school. I didn't read any books about business or
Yeah.
entrepreneurship. I read Of Mice and Men. I remember that much.
Yeah. Romeo
Don't
and
tell me
Juliet.
Romeo and Juliet, Macbeth. Look, don't get me wrong, Shakespeare, I'm sure he was a great guy. I don't think I needed to read five or six of his books.
Yeah.
Maybe one about like, entrepreneurship or business or investing or
Yeah.
even anything that wasn't bloody Shakespeare.
Yeah. Yep. Well, I tell you what, anything I've missed that you really wanted to make sure the listeners hear, other than, like I said before, get your books and sign up for the newsletter.
Yeah, Freeman Publications is the company name. You can find our books on Amazon. We've got about 18 of them now. freemanpublications.com/bonus is where you can sign up to the newsletter. I will send you an email every single day,
Yeah. And
and
they're good.
I will tell stories about my life. I sent one today talking about how I've been sick for the past few days, but hey, there are more important things in life than money. And sometimes if you got something like the wheel strategy working in the background, then you're
Yeah.
still making a bit of money on the side.
I tell you, I saw that email and I read it, and the next thing I was scanning my email to see if you were canceling this meeting. So I mean, they're not just canned emails; they're like current, relevant emails that are going on
No,
right now.
it's I just talk through my life. I talk through what I'm seeing in the market, and I'm honest with people. Like I've got one going out tomorrow that I wrote today, just about like holding my hands up, saying, "Look, I missed Uber's turnaround. That's on me. I missed it. But guess what? You don't have to bat 1,000 in this game. Just have
Yeah.
to show up, and be patient when you do get it right."
Oh yeah, absolutely. Well, Oliver, thanks for being with us, man. I'm going to put links in the show notes I mean, your author page on Amazon. When you pull that thing up, it's a library it's a financial library.
Appreciate that. I appreciate that. We've
Yeah.
got many,
Well,
many
thanks for
more to
being with
go.
us. And because I think you're what 8, 9 hours ahead of us, and so it's nighttime there.
Yes, just wrapping up now. It's about 20 to 8 for me.
Okay. Well, I'll let you go, man. That way you can go play with your child and eat some supper, whatever you got to do. And but thanks again for being with me and joining
I
me on this.
appreciate that. Appreciate that, Dave. Anytime.
All right, man. You take care. Hey guys, my publishing company, Pressure Tested Publishing, just came out. Oh, before I forget, pressuretested.com. That's where you can find it. But we just came out with another book, Deschooling Your Children. Here's the thing, the book's been out for a while, but the hardback edition just came out. We just got this uploaded to Amazon. It is available on Amazon in hardback, print, and Audible. And so, Deschooling Your Children, homeschool, unschool, schooling from home, and everything in between. And this thing is geared mainly to inexperienced or brand new homeschoolers or people that are thinking about pulling their kids out of public education and putting them into homeschool or some hybrid of homeschool. So if you're interested in anything like that, this book will help you understand how easy it is. It's not as hard as people would think pulling your kids out of public education. And I guarantee once you have more control over the curriculum, and don't worry about being unqualified, because it's way easier than that. You can find other people, video programs, tutors, co-ops. you don't even have to be the primary teacher. And so, don't worry about all that, but buy the book. I'll explain it all. And I heard a joke the other day, or it was on a meme or something I heard, and it was talking about a parent thinking they were unqualified to teach their children. Well, here's the thing. It's interesting that you might think you're unqualified because you were brought up, more than likely, in the public school system. So shouldn't the public school system be saying that you're qualified to teach your children if they're the ones that trained you? It's a weird conundrum. A little bit of circular reasoning going on there. But yeah, if you're thinking about doing anything other than public school with your kids, check out the book. Guarantee you'll enjoy it. Guarantee it'll help you and relieve a little bit of anxiety about pulling your kids out of public education.